So in this video, I'm going to go over 2 stocks that are ready to buy today, okay? So you got to act quickly and go ahead. If you think it's a right buy, you got to do your own thinking on this. So if you think it's a buy, go ahead and buy them today. I see that they're breaking out and they're good to me. So other than that, we're going to go over the charts. We're going to go over it on a technical theme, break it down on the fundamental theme, and then I'm going to switch it up and we're going to go over some news stories on these stocks, okay? So it's going to be a little bit different. But other than that, I want to welcome you back, fellow speculators, to Stocks Now. I had to change the channel. I didn't have to, but I'm just experimenting right now as to what the SEO or SEO optimization, of YouTube, what that is about. So I'm trying to figure it out. So other than that, it's still the Speculator's Edge because that is my brand. I did create it. So other than that, welcome back, and let's go ahead and hop to it because time is money, okay? Okay, so the first stock that I'm introducing here is Jefferies Financial, ticker symbol JEF. So we're going to go ahead and break this down on a technical theme, and then I'll flip over on the fundamental, and then we'll go over some news stories with this stock, okay? So other than that, it's a little bit different going over the news. I don't really care to go over the news. I'm more technical on trading. I believe price action and volume is everything that you just need to know within buying stocks, okay? Then that's really how I see it. And going over this, for over 14 years, that's what you start to figure out, okay? So other than that, this is in the financial sector, the asset managers industry within the financial sector. So we are at 52-week highs here on this stock. This is really great. This stock is acting great today. Apparently they reported earnings or something of that nature. So this is the reason why this stock is gapping up today. So we have the first thing that we're looking for is the prior trend from base to base. So when we go on base count, we have one base here, we have 2 base here, and we have the 3rd base right here. So when you're measuring the prior trend, you measure the prior trend from being at the low of the prior base to the high of the starting of the next base or the following base. So from 2258 to 3464, that is well over 25%. Okay, so then we look to see, well, what are we in right here? What cycle, what part of the cycle are we in within the stock, okay, within the stock's price? And we are in, of course, the stage 2 uptrend. This is the accumulation phase where we do have massive demand, accumulation, meaning that institutions are buying this stock early on. They're pumping the stock up due to numerous of things. So there are a lot of variables. Could be change in management, could be the sales percent change, or their product is selling. Stuff like that. Those are important factors, okay? So other than that, you can also tell by the shorter term moving averages being above the longer term average moving averages. So that's how you tell if you're in a stage 2, okay? Next thing that we're going to do is we base count. We see, okay, well, within the cycle, within that stage 2 cycle, where are we at within the base? How many patterns and bases have this stock put in, okay? Because usually once you start getting up to the 4th or 5th base, that's when a stock starts getting really tired and the price starts to get really volatile. So you'll have movements to the downside, large movements, large price movements to the downside, followed by heavy volume or heavy selling or heavy distribution, okay? And distribution just meaning that institutions are already selling their shares to us retail investors, okay? Because well, they're profit taking and they don't see much more of the stock. They don't see much more of a run for the stock. They've already made a large amount of money, and they're taking their profits off the table right there, okay, and just selling it to us retail investors that have come too late to the party, okay? So it's best to get in early on the party. You want either on the primary base, the secondary base, or the 3rd base, which is the tertiary base, okay? And this one is in a 3rd base, or the tertiary base right here. And the pattern that we are putting in is what's called a flat base. Okay, this is a flat base. This is right here. You have this support line which goes straight right here, and this resistance line which goes straight right here. As you can tell, it's touched that $34 level a couple of times, and it's touched that $29 level a couple of times. Okay, this is more of a flat base. And so within this flat base and within this pattern, within this base, what we're looking for next is, well, what's going on with price? You have to ask yourself, what is happening with price today? Okay, what's going on, or what's been happening with price, period, within that base and pattern, and what's the price doing today? So we go and look, and we see that we have this nice low volatile period. Low volatility means that it's just a contraction in price. That price hasn't really moved out of a certain range for a period, or for a period of time. Okay, and really what you want to see when you see low volatility or a price contraction or a price range, you want to usually see it in between 5 to 12% from high to low. And as you can tell, within this nice low volatility contractional period here, we only go from high to low. We're at about 10.5%. Okay, and from this period, of course, we're about 7%, which that's really good to see. And of course, how long were we in this for? Let's see here. We've been in that price range for about 31 days. That's a pretty good length of time for the price just to stay in a contractional period or in a tight range of 10%. Okay, that's good. That means that the price is coiling, and of course you can see we had this little dip right here past these lows in here, and touched this low back here in the base. But what it did next, of course, you can just see demand increase like crazy, and then boom, takes off today, gaps up. And of course, we put in what I call work off the 50-day moving average. So this means that there's buying off of this 50-day moving average every time it touches that 50-day moving average, except right here. But you can tell it comes right back, ripping and roaring. And that's what you want to see. Okay, you want to see that rip. Okay, and so other than that, we're looking for 52-week highs. Is price close to 52-week highs? It's best to have price close to 52-week highs, meaning that you want price to be maybe anywhere from 10 to 20% away from 52-week highs. Okay, sometimes I like it where it's even a little bit further, maybe 30%. Because if the price is putting in work and making this rounding bottom and moving up the right side, we can get more profit out of it if you're buying correctly and adding to your position properly. Okay, and that's how you make big money within the markets. Okay, so it's a patience game. You got to be patient and add to your position. This is an interesting game. Okay, so other than that, we are at 52-week highs. We did make that at 34.98. And next thing that we're looking at is volume. So what's going on with volume? Do we have an increase in volume? Do we have a decrease in volume? Or is volume, just flat? Is there any, demand or supply coming into this stock? And as you can see, we've had huge demand back here, massive demand, and a little bit of profit taking here. Okay, so other than that, as this forms this base here, as this chart forms this base, or the stock forms this base, you can see that volume dries up, so it decreases as it's forming this base, and that's what you want to see. This is just telling you that there's not really investors watching this stock. They're not really caring to sell either. Larger institutions are not really, they don't really care to sell at this point, and they're just holding on to the stock. Maybe they might be distributing a little bit of shares, taking a little bit of profit off the table just in case. But there's nothing of price movement that's going to tell you that this stock is dead in the water. We don't have gap downs or anything like that, major gap downs. The moving averages are still moving upwards. I mean, we're still seeing accumulation within this stock. Okay, so that's a good sign. And today was the heavy hitter today. Okay, so other than that, we do within this contractional period. Of course, when you see this price range, when you see a price range like that of 5% to 10%. You want to see volume decrease as well, and of course we do, because that's just telling you that price and volume is in connection with each other, okay? That they are connected, and that there's nothing, you know, nothing wrong with that. Nothing wrong, nothing, you know, that's telling you that there's some, you know, bad, not necessarily bad, but, you know, it's about to change directions, okay? So there's nothing really good or bad out there. It is what it is, and that's just life within itself, okay? So trading stocks is actually just life. This is how life works. It's interesting to be a trader and to understand these things, because it really does help you with life as well, okay? So the more you learn, the more you figure out yourself, and the better you become, okay? And that's just in every aspect of life. And this is why I love trading, and also to bring you information like this as well, okay? So other than that, we do have this nice volume dry up here, this volume decrease right here. We do have this major sell right here, these 2 days right here. Don't know what that's about, but you know, your guess is going to be as good as mine. Don't know anything about that, okay? So, but all I know is that we had demand accumulation right here, and it just devours this supply right here. That's good to see. That's what you want to see, okay? And then we had this nice gap up today, and on good demand. So other than that, we are increasing while we're breaking. We are increasing in volume while breaking out to 52-week highs. That's what you want to see. So other than that, the super pivot was breached at $34, this purple line right here. And so your risk management, how you're going to place your stop, you're going to place your stop 3 cents below today, okay? So that'll give you a nice tight stop, and it'll give you a risk of 3%. So let's flip over to the risk management and position sizing sheet real quick, and I'll show you how to handle this here. So let's say we're buying at $34.07 right now, and we place our stop at $33.24, okay? So it's actually stop loss percent is about 2.44%. Okay, so that's really good. So let's say if you have an account equity of $1,000, let's say you're willing to only risk 1% of that. I recommend, you know, not going over you know, 5%. If you have a small account, it's difficult to because you have the tendency of wanting to go all in, and that's understandable, because well, it's just understandable. I mean, you want to make good returns, and you're trying to build your account, and you're trying to compound your account. It's understandable going all in on a smaller account. So, you know, let's say, you know, if you want to raise your percent willing to risk on a trade, and I don't necessarily recommend this, especially for larger accounts when you're trading a larger account. So let's say you're willing to risk, well, let's just keep it at 1%, okay? So 1%, you're willing to lose $10, okay, on this stock, or on this trade right here. So your buy point is at $34.07, your stop at $33.24, your position size, so how much you're going to bet or put towards this stock, is going to be $410.48. So you're using about 40% of your total account. With the smaller account, that's what's going to happen. That's just how it works. So on larger accounts, not necessarily. So if you change this to $10,000, you know, you're going to be risking, okay, well, 40%, just due to the fact that your stop loss is really tight, okay? But that's okay. So as long as your stop is tight and you obey your stop loss, you'll be fine. So other than that, the position size, $410.48. You're going to buy 12 shares. And your profit target in percent terms is going to be 7.31%. You want at least three times your risk, okay, for your reward, and that comes out to 7.3%. Your dollar in profit target is going to be at 36.56. Okay, that's where you want to start taking a little bit of profit off. If not, what you can do, if the stock decides that it wants to pull back, then what you can do is you can add to that position when the stock starts moving up out of that little pullback, okay? And that's how you would manage that. And then you would move your stop up at the low of that pullback. So to go over that real quick, let me show you how that would work real quick. Let me pull this up and I'll show you exactly what I mean by that if the stock moves up like that. Okay, so if this stock continues to take off and you get your $36.56 profit objective reached, if it pulls back at that time, what you'll do is you'll start buying when it starts moving up past the highs of that pullback. Okay, you'll move your stop at the low of that pullback. That's where you'll place your stop at. Place it about 3 cents below that. Okay, and that gives you a little bit of a cushion, so you don't want to get knocked out of it too early. You want to let it keep on riding, and that's how big money's made. That's how you let winners ride. Okay, and you cut your losses, you cut your losers. Okay, this is how you trade. So let's say if this stock hits your stop, we'll go ahead and get out, but I'm going to tell you right now, if it pulls back, covers this gap, and starts moving down, it's probably dead in the water. Okay, this stock is probably going to be dead in the water. It might even go back into a range right here and just trade like that, okay, for a good while, and then maybe it'll take off again, don't know. But if it starts pulling back right here, covers the gap, this trade is probably more dead in the water than anything else, and I would just leave it alone and go ahead and go on to the next opportunity. And that's what that's about as well. Okay, so there's always opportunity in the market. Do not get frustrated. There's always a chance to make a lot of money, and it's always around the corner. Okay, that's just how the market works. That's what I love about the market, because you don't have to marry these stocks. You don't really have to know anything about these stocks. You can just cut your loss real quick, get the hell out, and move on to the next trade that's coming around, you know. And maybe you got a huge winner that's just right around the corner, because they're always showing up. They're always popping up. They're always right there. And you just got to be there, be square, and be prepared, and be mentally prepared, emotionally prepared. Okay, so that's how that is with trading. So other than that, let's go ahead and let me show you real quick. If you want to use, like, say with my method, which is adjusting with risk. Okay, let's say if you have a $10,000 account, and let's say the percent willing to lose on the total account is only 0.5%, is a 0.5% of that $10,000, which would come out to $50. Let's say the percent that you're willing to risk of your total account equity, let's say that you want to risk 20%. Okay, so you're going to risk $2,000 of this total account equity. Okay, so you're risking 20%, and you're willing to lose $50, or 0.5% of the total account equity. Okay, so let's say if you buy at that $34.07 level, you place your stop. Let's say if you think that this stock is good, you think you have conviction, enough conviction, and that the probabilities are stacked in your favor, that this stock is actually going to take off running to the upside, and you're going to make a huge profit on it in the short term, then what you want to do is you want to give the stock enough room to balance itself out, to give that stock the opportunity to make that run. And this is what my adjusting with risk method is about. It gives you that cushion to do that. Okay, so to give that stock some room to run. So let's say if we let's go back to the chart here. Let's say if you place your stop right here at the gap, or let's say yesterday's low at 31.38, and you place your stop 5 cents below that, that's when you'll know the trade is actually dead in the water. Once it gets past that level right there, it's really dead, and you just want to leave this trade alone. There's not going to be any opportunity. But let's say if this stock does go ahead and try to cover this gap, which it may do, and then turn back around and move upwards. Okay, that is a possibility. It's a huge possibility. Okay, so let's say if you think that is a possibility, and you want to hang on to this stock because the fundamentals and the news is great on this stock, and they're in a strong industry. They're in a, their relative strength in the industry is really strong as well. Well, this is how you would do this. Okay, so you'll place the low at the stop at the low at 3 cents below yesterday's low at 31.35. So let's go ahead and look back on the risk management sheet here, and I'll show you exactly how this works. Okay, so let's say you place your stop at that again at that 31.35 level. Okay, so 31 at 31.35, which was already on there. Okay, so practically what happens is you're going to buy your initial position at this point at $34.07. You're going to buy 18 shares, which your initial amount to be used towards that trade is going to be $626, which is only 6.26% of your total account instead of using your full 20% or your full $2,000 towards the trade. Okay, so you buy 18 shares for $626. You're using 6.26% of your total equity on the initial buy point. Okay, and what happens is what you got to do is you got to place, when the stock starts moving up past that buy point, you want to place another position. You want to use your full amount towards the second position at about 2.5% above that. Okay, above that buy point. The reason why 2.5% is because, well, that's what I like, but the real reason why is that if you start moving that up, that 2.5%, or when you place that buy at that second buy point, the more percentage points that you put up to where you want to buy at that second point. So let's say if you put it up to 5% or 10%, you dilute your reward to risk ratio. You're going to dilute it because each point that you move up, well, it takes more reward to balance out that risk. Okay, and that's important to know. So that, like William O'Neill, he likes to add to positions. He doesn't like to buy anything over 5% of the breakout. Okay, and that's the reason why. So that's what I'm getting to with that, is that all you'll do is, if you increase that number, that percent, all you're doing is diluting your reward to risk ratio, and you don't want to do that. Okay, so other than that, so you're going to place your second buy point at what I like is around 2.5%, anywhere between 1 to 2.5%. That's where I like to place it. Okay, depending on the stock and what it's doing, the action of the price. Okay, so your second position, you're going to be using $1,373 towards the second position. Okay, so what you'll do is you'll be buying at $34.92, and the high, of course, today was at $34.98. So you can place that maybe a little bit above at $35 as to where you might want to buy. That may give you around 3%. Okay, that's okay. So what happens then is, with the calculation on my sheet, is it gives you the total number of shares. So you're going to be buying in all 57, okay, out of the first buy point and the second buy point. You're going to be buying a total number of 57 shares. Total cost, of course, is $2,000. Gives you your average buy price. Your average buy price between both prices is going to be at $34.50. Okay, so your dollar willing to risk on total trade is still $50. You're still willing to lose $50. That's it. And your percent willing to risk is now 2.5%. Okay, so your target loss in dollar terms is going to be $1,950. Your dollar target stop loss is going to be at $33.63. This is where you're going to move your stop up to, is at $33.63. So when it hits that level, you're going to get out. Okay, so that's just the way that works as well. So your percent target stop loss is only 2.5%. And what you're looking for is, you're looking for a percent profit target of at least 2 times that, which will be 7.5%. So, or which will be 5%, but you're looking at least for 3 times. That's really what you want. You want 3 times that. Okay, 3 times your reward over your risk. Okay, so that allows, if you have a lower batting average, or a lower win to loss ratio, that'll cover a lot of the losses and make up for it over the long run. And I have charts in the book, Learning How to Position Size, a definitive guide to position sizing strategies, by Dr. Van K. Tharp. Excellent book. I recommend that you read that. Excellent guy as well. A character, let me put it that way. that is important because you can see a graph as to your win to loss ratio and how your risk or how you reward the risk ratio match together over time. If you have a winning strategy, you know, you can be batting 40% or 30%, but as long as your reward is larger, if you put your reward larger than your risk, eventually over time, you're going to be making money, okay? And that's how that works. So your dollar in profit target, you're going to look to take money off at $37.08. Not bad. So other than that, that's how that works. And if you want to use that, then use that. It's a good way to protect yourself, and not only that, just in case there's a huge drop the next day, it's not gonna like hurt you. Let me put it that way. You can have a 40% drop of $626, and what do you have? That's $240, and that's, you know, 2.4% of your total account. Instead of actually doing $2,000 and making that $800, and that being, you know, 8% of your account. Do you see what I'm saying? So, because I've seen that happen. It's happened to me before, let me put it that way, and that sucks. And so that's why I developed this method, so that you can protect yourself. Not only that, you can give the stock a little bit of room to run, because more than likely you're going to be right. And I don't necessarily want to say that, but when you're following volume and price action, more than likely you're going to be right. But you just got to give the stock some time to run. And that's how that works. I'm still learning that, and it's a hard thing to do, okay? It's very hard to be patient with a stock. But you just got to know, and you got to understand sell signals. There's a lot of sell signals out there that'll happen within a stock, and you just got to understand those sell signals, okay? So I will be going over in educational videos, you know, about that type of stuff, and that'll help you trade. That'll help your trading a lot. So other than that, let's go ahead and get a move on. We're already 25 minutes into the video. I don't necessarily want to make such a long video, but it is what it is. So let's go ahead and get a move on to the next stock, which is going to be Gildan Activewear, GIL. This is a beautiful breakout. This stock looks just primed and ready to take off. I mean, this is good to see, and the news is a little interesting. As you know, that if you follow commodities, commodity prices have been on the rise for the past several months, and I'm going to tell you right now, cotton has been on the rise for the past year to 2 years, and has made a major uptrend, and is in a really interesting consolidation phase right now within the price. And we'll go over the futures in that after we talk about the actual what do you call it, the news article, okay? The news, whatever, you know. A lot of news channels are wrong, and they're not good. I don't look at the news. I don't follow the news. I don't read the news. I don't watch the news. I don't care anything about that. I don't care about the political landscape. I don't care about any of that. Okay? It takes too much time away from what I'm doing, from what I love to do. And that's why I don't watch that, because I don't want to be lied to. I want information that's right, that's good, and you know, it's just life within itself. You want things that are good, and you don't want to be angry. You want to be happy, and the news will just fill you full of fear and, you know, bullshit like that. I mean, it's just a bunch of fear mongering. I don't have time for that. I want to be happy. This world might seem bad, but there's no such thing as good or bad. It's just, it is what it is, and it's how you make it. It's all about your head and your mentality as to how you make things. And eventually, you know, timing is everything. And when you start getting older, what it seems like is that time is of the essence, period. And so for all you young bucks, remember that. You're going to be saying one day, I'm 31 years old, and I'm saying this now, that I'm tired of dead-end roads, and life is too short. So time is everything. It's of the essence. I mean, you have to make it, you have to put that in your head and repeat it over and over, because once you understand that, you're not going to be climbing, you're not going to be going down dead-end roads. There's no more of that. You make up your mind and you do what you want, and follow your passion, follow your dream, and help others, okay? and that's what that's about. So, and this is what I'm doing for y'all. And it's free. I mean, you're welcome behind that. So other than that, Gillian activewear here, consumer discretionary sector in the clothing and accessories industry. Prior uptrend greater than 25% from this base up to the secondary base. Okay, this is a primary base. We are in a stage 2 accumulation phase, which is the uptrend. As you can tell, we have heavy demand each time. Gapped up right here, boom, boom, boom. Nice demand all within this stock. Really nice demand within this secondary base right here, within this double bottom pattern, okay, with this handle, double bottom with a handle. There's a handle right here breaking out of the handle today. The price, we're showing low volatility within this. I think this was only from high to low, 34 from 37.97 to 34.04. This was about a 10 to 11% drawdown. That's awesome. Tight range for like 37 days. Yeah. Nice and tight right here, okay? And not only that, price works off this 20-day moving average, and not only that, we have nice buying off this 50-day moving average as well. And today we approached 52-week highs at 37.97. The high today was at 37.93. I wouldn't be surprised if by tomorrow we get to new highs or all-time or 52-week highs, okay? So other than that, volume here, we do have a massive decrease in volume within this pattern, within this base here. And as you can tell, nice volume dry up here, volume dry up here, and huge demand on each bounce, okay? And not only that, massive demand coming out today at around a million shares being bought at around, you know, 30, anywhere between 35 and 38, $37 there. That's, do the math, and you know you've got over nearly 40 million shares being, or $40 million worth of this stock being bought, and that's big. Okay, that's institutional buying. You don't have 30 to 40 million dollars, I can tell you that right now. I don't have it either, and yeah, that's not us buying. That's institutional buying. Okay, so that's good to see. Super pivot was breached at $37 right here. And the risk management, how you would place your risk management and position size appropriately. You place your stop 3 cents below the low of today, or the low of yesterday at 35.55. This gives you a risk of about 5.5%. So it's a nice tight stop loss, okay? So let's go ahead and look at the risk management and how you would position size yourself appropriately towards this. So let's say you got a $1,000 account. You're willing to risk 1% on the trade. Which is only $10 your total account, so you're only willing to lose $10 your total account equity. Your buy point will be at 37.47 with your stop being placed at 35.55. Gives you about a 5.12% stop loss right there, okay? So that's good. So your position size, you're only going to use about 10% of your total account equity, so 195, near 20%, so $195.16. You're going to buy 5 shares. Your percent profit target, you're looking at 15%, okay? That's 3 times your stop loss percent, okay? So your dollar in profit target terms is going to be around $43.23, okay? So if this stock does break down below that low of 35.55 of yesterday, then just go ahead and, you know, obey your stop loss, get out, and just get ready, because this stock probably will either continue a sideways range or maybe even just go ahead and bomb on down, okay? So other than that, that's how you would manage your risk and manage your position size towards that, okay, with a $1,000 account. But other than that, another thing I want to point out is the relative strength line, the performance line compared to the S&P 500 and the NASDAQ is shooting to 52-week highs, with the stock not even reaching 52-week highs yet. This is really good to see. It's showing you strength. This is an alpha stock right here. This is a leading stock, okay? You want to follow the leaders. Leaders are great. This is where the money's going into, okay? So other than that, those are the 2 stocks, okay? Let's go ahead and go over the fundamentals real quick, and I'll show you what's going on. This has a composite rating. Jefferies Financial has a composite rating of 98. It is ranked number 3. I've been watching Futu, FRHC. I've watched these stocks for the past 2 years. Really, this one I watched for the past 2 to 3 years, and Futu I've been watching for the past 1.5 years. yeah, massive gains in those, but awesome. Jeffries right behind them, ranked number 3 within that. Their industry group rank is 40 out of 197. That's great. You're swimming with a good industry, with a really strong industry. The group relative strength rating is an A minus. Great to see. Apparently, we did have earnings, and earnings per share percent change last quarter was 713%, with 422% earnings growth, average earnings growth over the last 3 quarters. So this company has really been pushing out some great numbers, and they're making some money here. The 3-year earnings per share growth rate has been 63%, with 4 years of annual earnings per share growth. Okay, that's great. This is monster. This is a monster right here. Your sales percent change last quarter was 70%, so they are selling their product, which, I mean, of course, it's their services that they're selling, and they're doing great. They're accumulating money. They're making money. 3-year sales growth rate has been 29%. So out of 3 years, they've been making some money. Not only that, the annual pre-tax margin 17.8%. So they're keeping that money. They're keeping quite a bit of that money. Okay, so that's great to see on that. Not only that, 10% change in the funds owning the stock, with 2 quarters of increasing fund ownership. Matter of fact, I think they're putting their own money into their stock. That's good to see, because they have a lot of confidence within themselves. It's what you want to see. You want to see management have confidence within their own company. So they'll put their money where their mouth is what I'm saying, and that's what you want to see. Okay, so other than that, we are swimming with the institutions. They have some money and they're backing it up by it. Okay, so great to see. Let's go look at GIL. Let's see what's happening with this one on a fundamental theme here. So we are ranked number 4. They do have a composite rating of 87. Figs, I watched this one. I was going to trade this several days ago on a breakout of a cup with handle, and I didn't trade it. And I should have traded it, but you know, it is what it is. So what? You move on, because there's another opportunity around the corner. So anyway, industry group rank 79 out of 997. So they're in a decently strong industry here. The group relative strength rating is an A minus, so they do have some strength behind them as well. Earnings per share due date is on July 30th, 2021. Okay, earnings per share percent change last quarter 700%, massive. 222%, 3 quarters of average earnings per share growth, massive. Okay, 3 quarters of earnings per share acceleration, awesome. It's great. It's what we want to see. Okay. So sales percent change last quarter 28%, so they are selling product right here, not necessarily keeping the money in all that well, but yeah, so what it is, what it is. I don't doubt that industry is a little difficult. There's a lot of competition within there. Okay, but we do have 3% change in funds owning the stock, with 3 quarters of increasing fund ownership. So not only that, the accumulation distribution rating is an A. So we do know that they are accumulating, institutions are accumulating the shares within this stock. Okay, and they're in there. So we do have institutions buying with this stock. So let's go look at the news. So let's see what's happening with Jeffries here. So Jeffries Financial Group announces second quarter 2021 financial results. They deliver record second quarter and 6 months revenues and net income. Okay, so that's great to see. Not only that, they increased their dividend up 25%. So any of you that like dividends, there you go. They increased 25%. That's a pretty big increase, okay, in a dividend rate. Okay, so awesome job, great to see. Other than that, let's go see what's going on here. So the Jeffries Board of Directors declared a quarterly cash dividend equal to 25 cents per Jeffries common share, a 25% increase on the prior dividend rate, payable on August 27, 2021. Let's see here. Their net revenues of $1.67 million here. Well, it would be more, but a record for a second quarter, up 56% over the prior year. Second quarter is then all-time record quarterly net revenues. Pre-tax income $429 million. Also a record for a second quarter, and up 148% over the prior year quarter, demonstrating the operating leverage inherent in our business model. And record second quarter net earnings of $318 million, up 147% over the prior year quarter. Okay, so annualized return on tangible equity of 26.9% compared with 11.6% in the prior year quarter. So these guys are making money, and they're keeping their money as well, which that's great to see. I mean, that's what that's telling us. Okay, so other than that, let's see here. I know that Jeffrey's group, let's see here what we have. Every 6 months. I kind of just scan through this. Like I said, I don't really care reading the news because sometimes it can scare you out, or it can make you even think like, oh yeah, this stock's going to run up, blah, blah, blah. But you know what? We can't tell the future. We don't tell the future. If you could tell the future, we'd all be rich, okay? And that's just how that works. Not only that, you wouldn't be going down a stupid road that you've gone down before, okay? If you could tell the future. You just don't know. So just live today, work in the present, okay? This is just how this works. Rich Handler, CEO, and Brian Friedman, the president, said, we would like to thank our colleagues and clients for Jeffrey's spectacular results thus far in 2021. Our performance reflects the continued growth and strength of our global full-service business model and our increasing market share, particularly in investment banking, where net revenues for the first half of the year were more than $2 billion, and our backlog for the third quarter is at a record level. Additionally, our equities, fixed income, and asset management businesses are all performing well, even as the environment becomes more normalized relative to the uniquely exceptional first quarter. So we intend to continue our relentless focus on serving our clients while strategically investing in our global platform and over 4,000 employee partners. We will strive to remain nimble, non-bureaucratic, entrepreneurial, and mindful of risk, as well as continue to prioritize and value our people and culture. So we're strategically hiring at all levels, and we see this as a key driver of continuing growth. This is evident, particularly in investment banking, as our capabilities reach and brand are proving extremely scalable. So these guys, like I said, they're putting their money where their mouth is. I think they own over 17 or 20% of the shares in the stock. So they're putting their money where their mouth is, and I don't think these guys are BSing right here. You can tell by their sales, their earnings, just their results here. Okay, so other than that, I think there was something else as well. They announced 2 new members as well. This was 21 hours ago, right here. So, well, they don't have that on there. So, other than that, I don't know necessarily what that's about, but I'm going to tell you right now, if they added 2 new members, depending on who the members are, I'm going to tell you that investors like to see those types of things. If they have bad management before and they get rid of, or even bad board members and they get rid of them, guess what? If they put on, hire a new manager that they like, or, board members that they trust, that they know can work the company up to where it needs to be, investors really like to see that, and hedge funds like to see it, institutions like to see it. They'll put their money into that, so they'll put their money to the race on that. Okay, so other than that, let's go over Gildan Activewear here. Apparently what happened was that they joined the U.S. Cotton Trust Protocol. Okay, so as you can tell, Gildan Activewear and its portfolio company owned brands including Gildan, All Style, American Apparel, and Comfort Colors is the newest member of the U.S. Cotton Trust Protocol. Gildan is one of the world's largest manufacturers of everyday basic apparel and is also one of the largest domestic consumers of U.S. cotton, which represents the majority of the fiber used in the company's product. So at Gildan, we have a vision of making apparel better, and we have long been committed to ensuring that our supply chain is ethical and sustainable from fiber to shirt, said Glenn Chamity, President and CEO of Gildan. Joining the U.S. Cotton Trust Protocol is a natural next step in our sustainability and transparency journey, as it will increase transparency into our supply chain while also providing us with additional assurance that the cotton we purchase from the U.S. is sustainably grown with low environmental and social risks. So they're looking at more being on active within the, within that, more green solution, and worrying more about the environment and social risks, on our half, which is good. I mean, that's good to see. That's a good goal. That's a good, good thing to know. So, do I really care about it? No. Because it is what it is. And but anyway, so the U.S. Cotton Protocol is a farm-level, science-based program that sets a new standard for more sustainably grown cotton, and it brings quantifiable and verifiable goals and measurements to sustainable cotton production and drives continuous improvement in 6 key sustainability metrics: land use, soil, carbon, water management, soil loss, GHG emissions, and energy efficiency. Members also receive full supply chains transparency through the protocol credit management system. Okay, so Gildan apparently has a proven track record of a strong commitment to sustainable practices, and we are pleased to welcome them as new members, says Dr. Gary Adams, president of the U.S. Cotton Trust Protocol. And so that's good to see. So that's the reason why, you know, there's been a lot of demand for this stock apparently, is because they're it's not just because of, you know, their sales may be increasing and the rise of, you know, cotton prices and them pushing that onto the consumer. That's not just, you know, necessarily the reason why the price has been rising in Gildan, but it's also because of this. So investors like to see that, especially, you know, ones that think they can see longer term or going for the longer term, which are, you know, green solutions and stuff like that, environmental solutions, which is, it's good to see. I mean, we really do need to start taking care of Mother Nature, and we really need to think about that, especially our oceans. With all the trash in our oceans, we do need to think about that. I mean, that is very important. Okay, and you know, I'm not saying that I don't care about any of this. I just don't care about the news. That's how that works. But it is important that we do, on a longer term pace, and even during the short term, that we work on keeping our, you know, our world clean. I mean, that's good. You know, I like fresh air. I like to have fresh air. You know, I don't like them necessarily cutting down a ton of trees and taking our fresh oxygen away. I don't like that. But you know, it is what it is. I like to breathe, and you know, a lot of these chemical refineries, you know, they tend to suffocate us. I know, because I lived in Berg, Texas, which is pretty big with refineries, and yeah, the air in that town sucks. It's thin, and yeah, it's really smoggy, and it's just, I don't know how to put it. It's not thin. I didn't mean to say that. It's just, it's hard to breathe. That's what I mean, thin. And so you don't have much of it. Yeah, you don't have much fresh air, and it's gross. But other than that, trust me, I worked in those refineries, and they have tons of leaks, and yeah, it's pretty mind-blowing. So pretty sad is what it is. Other than that, that's what's going on with that. To show you what cotton has been doing, as you can tell back here in you know, June or May of 2020, down here around $53 or so, and up to nearly $95. So 3 times the cost. So if you see you go to the store and you know that food prices have been rising, housing costs have been rising, rent has been rising, gas has been rising, oil prices have been rising, commodities in general have been rising, all the way from your softs to your meats to your grains. Yeah, well, you wonder why. And I'm going to leave it at that. But other than that, that's those are 2 stocks that are to buy today. And let me go ahead and get this video out. I'm going to stop it right here. Thank you for supporting and watching the video here. I hope you enjoyed it and found it educational. So I'll be back with a video about the markets later on this afternoon, let you know what's going on. Other than that, leave a comment, like the video. If you have any questions, I'll be more than happy to help. Just ask the question and pay attention to those comments, because I like to help y'all, okay? Other than that, thank you again for watching here at Stocks Now. We trade in the present, study the past for knowledge, and work on the process of trading to build our future, okay? Thank you again for watching, and again, these are 2 stocks that are ready to buy today, but do your due diligence before buying them, okay? Pay attention to that. That's your responsibility. I'm not a financial advisor. I'm not a broker. So I'm not advising you to buy these stocks. I'm just saying they look good to buy. Okay, today, now. Other than that, opportunities awaits, my friends. Have a good one.